Hi, everyone. It's great to see such a great turnout. So I think we're going to get started. I know this room is a little bit difficult to find, so we usually give people a few more minutes to find us, but we have a pretty full room already. So welcome to our session on principles for successful digitization. I'm Isabel Barris, and I've been working with CGAP for the past 2.5 years on MFI digitization, and I will be your moderator today. So I'm delighted today to welcome 3 seasoned experts on the panel who will all share different perspectives on successful digitization. To my right is Peter Okondrian, who is the Strategy and Business Transformation Manager and Technical Assistant to the CEO of Action Microfinance Bank in Nigeria. He'll share the perspective of MFIs on the topic. And Peter has over 12 years of experience in technology, and he's been instrumental in several projects at e-MFP Nigeria, including change management and digital transformation, so very relevant to today's topic. Next is Khalid Kabir, who is the CEO of Vitas Group, and he will share a holding company's perspective. Khalid brings over 20 years of cross-functional experience in microfinance, and he's been instrumental in Vitas Group's digital transformation and the resultant change management, as well as Vitas Venture, an early stage fintech venture investment portfolio. And during the past 2 years, Khalid has led the process of redefining the group's vision and spearheading a shift to a data-centric, digital-first lending model for MSMEs. And finally, Marnix Mulder, who is Director of Market Development at Triple Jump, will share the investor perspective. So Marnix brings over 20 years experience as impact investing professional. So we are very excited to have you all on the panel and look forward to the discussion. But before the discussion, I wanted to set the stage for our discussion. And I'll start by sharing a few key learnings from CGAP's work on MFI digitization over the past 3 years. So first, I'd like to ask you, by a show of hands in the audience, who is frustrated about the pace of MFI digitization? The success. Can you raise your hand a little bit higher so we can see it? Okay, not too many people are frustrated. That's interesting. So now let me ask the flip side of that question. Who is hopeful that digitization can help MFIs build scale, can help MFIs build efficiencies and increase benefits for their clients? Again, show of hands. Okay, that's very interesting. The sentiment in the room is echoes what we've seen, but we've tended to be a bit more frustrated about the slow pace of success after having started this research in 2020 and dug a little bit more in examples, looking for examples. And when I say success, I mean also measurable success. So not just having a digital implementation that goes to fruition and goes all the way to the stage of actually being implemented, but going to that stage where you can actually see and measure value for both clients and the MFIs. So we've been frustrated because despite significant resources that have been invested, there are not many MFIs that can measure that success. But we also have hope because digitization holds the promise to create significant value for both MFIs and their clients. So what has CGAP's journey been? CGAP's inquiry into success for MFI digitization started with some research, trying to look for cases of success. And I think it's important to say that the CGAP's inquiry into that MFI success was really anchored into the value that is being created by digitization. So it was really aimed to not lose sight of what is the end goal. The end goal is not digitization for the sake of digitization. It is really to have concrete results that can be measured and that impact both the clients and the institution. So in 2020, CGAP embarked on a journey to find that out. What leads to success? What are some of the challenges to digitization? And that led to case studies that were published in 2021 that described the journey of institutions that were able to create and measure that value, and also led to starting to have insights that emerged on what was this recipe for success and what were some of the roadblocks to success. And we saw that the practices that led to success were anchored in a few concepts. Just to give you a few examples, one, that success was based on incremental success rather than a full overhaul of technology. That simple technology, that successful cases also adopted simple technology and MVP approach, a minimum viable product approach. And that there was also the ability to measure the change, to measure the progress in customer behavior following the digitization. Those successes were also anchored in a strong focus on the core operations, on the core of the business of credit services. And that led us to dig further on one specific digital implementation, that is the automation of credit renewal. This might work. So these findings inspired us to combine the most successful practices that we saw in our research and to test them. And so we distilled the previous findings into 5 core principles for successful digital implementation, and then we invited MFIs to test those principles. We worked with 5 MFIs to automate loan renewals between February 2022 and March 2023. And we tested a structured approach to creating this customer and business value. We also, in parallel, tested an approach to build a standardized data analytics practice for the 5 MFIs that participated in the loan renewals, but also for 22 additional MFIs that only participated in the business intelligence exercise. And what did we find? The pilots validated the 5 actionable core principles that you see here. And the business intelligence exercise revealed it did a few things. One, it revealed the state of MFI business intelligence capacity for the 27 MFIs that participated in the project. And those were MFIs that were considered to be more digitally matured. We had set the bar higher, and yet we saw still some challenges. And it also revealed the types of rich insights that can be gained from such an exercise, from analyzing customer behavior. What we saw was that MFIs with the most advanced digital implementation also demonstrated the greatest ability and competency in data analytics and business intelligence. So they had the ability to track that progress, to measure and track it. And this was consistent with our earlier research that behind successful digital implementation, there are strong business teams that are working with the data analysts to track customer behavior. We also run a community of practice, so to scale the approach and to go from 5 to 22 MFIs, we structured operations a little bit differently, and instead of doing one-on-one support with institutions, we developed some supporting materials and a data bootcamp that all MFIs joined. And in this very structured way, also guided them through the process of improving their business intelligence practice and creating key dashboards. And so that allowed us in half the time to support 4 times more institutions in this process. And it demonstrated that this exercise can be replicated more efficiently with a larger pool of institutions. And this year we are partnering with networks, holding companies, and funders to test that approach with their own portfolios or network members. So after analyzing the successes and failures and developing and testing the approach, we now have a better understanding of what drives value in MFI digitization. And the way we would summarize this is, one, that business intelligence is the bedrock for successful digitization. Successful digitization requires defining and measuring the progress we want to achieve. It seems pretty simple, but we have found actually in our exercise that one of the parts of the exercise that took the longest time was actually defining who are the digital customers. Just doing that initial segmentation of traditional and digital customers really got MFIs stuck. And then the second is that creating value rests on those 5 core principles. We believe that if MFIs follow these principles, they will most likely succeed and benefit from their digitization efforts. Now, those principles were tested with a specific digital implementation, that is the automation of loan renewal. We know that a lot more testing, will be worthwhile, and it will be interesting to see also how those principles play out with other digital implementations. So we're interested to continue to follow that progress. This doesn't mean also that there's a particular order in the principles, except maybe for the first one, really setting the stage to empower the product teams to really make the decisions about product development, be able to iterate, be able to really drive that process. And another important point in all this is having strong communication between the data team and the business team. So now, just really quickly, we see the digitization journey along a pathway that starts with the bedrock, with ensuring that MFIs have the strong business intelligence capability, and then deploying digital implementations that have a lot of promise for value creation. Again, we chose automation of loan renewal because this is one such digital implementation that holds that promise of creating value for both. If you consider that most MFIs have about 80% of their portfolio that is loan renewals, you can envision how much value, how much business value that can create for MFIs when they're able to automate that process. So we've done some modeling to project that in the pilots. The pilots were relatively short; they were 12-month long. So again, it'll be interesting to see how those results play out also in the future. That's actually it for me, but I will just put back this slide with the core principles, because now we're going to shift a little bit, and we are. So now that we've set the stage for what we mean by successful digitization and what are some of the core principles, I'd like to turn to the panel. And the way that this session is going to play out is we don't have any presentations. It's really a Q&A session. And so I'd like to turn to the panel and get your perspectives. And first, we'll talk about your journey with digitization and about the challenges and opportunities you have faced. So Khalid, I'll start with you first. And can you speak about your own digital transformation journey at Vitas Group, and can you share some examples of the biggest challenges you faced, please?
Yeah, thanks. I work for Vitas Group. We are middle market lender, so our average ticket is around $5,000, and we are 20 years old organization in Middle East. Mostly 4 out of 5 countries are in Middle East, and there's a reason why I mentioned 20 years. Because we carry a lot of legacy in terms of people, products, processes, tech, you name it. In early 2019, the one question we were asked by our board was that the digital wave is coming, and everything comes a bit slow in Middle East. So if it has hit Asia, it will come in 7 years to Middle East, and this wave is coming, and we see that. But how do we stay relevant as a MSME lender in this during this change when the wave hits us? So this was the question which was asked by our board. As it happens in many cases, we tried to answer the question from technology. So we brought in a loan origination system. We started looking at middlewares. We looked at the tech stack. We looked at the core. And in the summer of 2019, we realized that we are looking at it all wrong. This is not a tech question. It's a business question. It sits at the heart of a customer, because what we learned at that point was that the customer base, the eventual consumer, is changing its expectation in terms of what service do they want. So customer of today, and I think people in my age bracket perhaps will no longer be here in 20 years. And we realized that a young person has the first instinct to go back to look for a solution or a product or service online. They want the service provider to be preemptive in terms of guessing their expectation. They want to stay connected with the service provider. They want hyper customization of the product. They want all in one place. So they don't want to go on a website and 5 clicks. They want to do it in 3 clicks. And that made us realize that this model of brick and mortar where the loan officer goes and find the clients will be obsolete. Because if I can get a burger from a dark kitchen, then there is no need for a burger shop, perhaps. I mean, they exist today, but who knows what will happen tomorrow. And then we did a research to see how many businesses are going dark. And we found a lot of them. So we had to redo the whole strategy again. We thought, okay, now the customer sits in the middle. The question is, how do we acquire the customer today? And how will we acquire the customer in the future? How do we process the client today? And how do we process them tomorrow? What kind of products do we offer today? What should be the product offering in the future? And with that, we came up with our own digital strategy, digital transformation strategy. And we tried to give ourselves a shock. And I see Nigel. And in late 2019, just before COVID, we went to Singapore, a fintech festival, and we were blown away. My CEO back then and myself, the world has moved on, and we haven't really realized it. In late 2019, we came up with a strategy, and the strategy has 2 pillars. We made a conscious decision not to disrupt or change the business as usual. If we have brick and mortar, we will bring in technology, we will try and improve the efficiency, we will give all the tools, but we will not disrupt the core. But rather what we want to do is to come up with a second pillar where we acquire the client differently, where we process it differently, where we give the loan differently. The product is different, the customer journey is different, the processing is different. So this is what we came up with a strategy.
Great, thank you so much. Very important points. It's not a tech issue, it's a business issue. And thanks for sharing your journey about this whole kind of strategy revamp. So now, Peter, I'll ask you the same question. Can you also comment on this quite general question on your journey? What has your journey been? And if you could pick just a few specific challenges also that you faced and how you addressed them.
Thank you, Isobel. And good morning, everybody. Bonjour. For us, I'm Peter Okodion. I work with ASEAN Microfinance Bank as a business strategy manager and business transformation. For us at ASEAN, Nigeria, we started our journey deliberately sometime in 2017, just before COVID. But before then, most of our processes were manual, our loan origination processes and the like. So when we started the journey, the transformation journey, the first challenge was defining the vision, then getting internal stakeholders, the staff, to buy in, then also the external customers. It was not that easy. We had to do lots of digital literacy, a lot of engagement, internal seminars, workshops with the customers, because the demography from where we operate, most of our customers are the people at the bottom of the pyramid. There are people that are not so conversant with technology, so we had to take them through that journey. It wasn't that easy, but speaking about the challenge, first, adoption. Getting internal customers to buy in. When people hear about digitization, the first thing the employees will think is, you're coming to take away my job. Then they start resisting. You do a lot of things to make progress. Internally, you still get some resistance and people trying to frustrate it. The first thing is to first assure them this initiative, this vision is not to take away your job. So that was the first challenge. Then for the customers, building trust. They want to be able to access their fund. So they want to be sure that I mean, in Africa, though the developing countries, connectivity could be a challenge. They want to be sure that whatever you're introducing, you're not coming to make life more difficult. They just want to have access to financial service, not necessarily the sophistication of the technology. So first, breaking that resistance, and we did that by a number of education. Internally, we did a lot of seminar. We had to walk people through, let them see the vision, let them see the big picture. I think that was how we started. Then, of course, the other challenge, technology, the cost of technology for MFIs, especially in developing countries. You know, most cloud solutions are quite pricey, and FS, because most of them are priced in dollars. Before you do the conversion, is so high. But we still want to improve on our process. So the cost of technology, then of course, globalization. Most of the tech experts are migrating from the developing countries to where they get more opportunities. So how do you afford them? So those were some of the challenges we face. And as we continue this conversation, I will share more on how we're able to overcome it. Thank you.
Great, thanks so much. And you've actually touched on a very important challenge that has surfaced already, is the change management issue that is encompassed in the fifth principle of designing a good user experience, not just for the external customers, but also for the internal customers, the staff, getting them also on board. So now, Marnix, let me turn to you. In your role as an impact investor, you're one step removed from the implementation for digital products and channels. Can you tell us why, as an impact investors, you're supporting digital transformation and some of the biggest challenges you've seen at your investees?
Yes, thank you, Isabel. Happy to do so. Good morning, everybody. We started in 2006, Triple Jump, and actually from that moment onwards, we have decided not to only provide financial services, but also non-financial services to our investees, because we understand that it requires more than just finance to develop markets. So that was the base and the principle that we work on till to date. And it's also my role in the company. Market development is a cool name for TA plus a lot of other kind of non-financial services that we offer to our customers. The reason to do so is twofold. One is we want to create more impact, but I think it's also smart for us. It helps us to create pipeline and de-risk our investments. So we did that from our launch, 2016. We have done a zillion of projects with MFIs. We started first with MFIs, and later on we added a lot of assets, but I'll primarily talk to that part of the business. And we run a lot of projects in the field of product development, strategizing, governance, and core banking systems, ICT. The nature of that work changed around 2012, 2013, with the introduction of mobile banking. There we, for the first time, we saw that ICT solutions actually dramatically changed your service offer. So it was not a back-end kind of conversation anymore, or a backbone. It became part of your front office services. And that is where I think the complexity started. That's the moment where we started to realize this is just more than yet another core banking implementation, which in itself is already quite challenging. It's something that actually changes the whole organization. In 2017, we launched something that we called the Digital Transformation Accelerator. Nice name. Not sure if we really accelerated things. We tried. We created actually a model to look at digital transformation through 4 lenses. One is the strategy and the structure of the organization. The second is the technology and the data itself. The third is people and capacity. And the fourth is the customer and value proposition. And all along those 4 elements, we analyzed status and digital savviness of MFIs. And we supported them in either implementing digital strategies or incorporate design thinking in a product development and all these kind of things. I think one of the things that we learned over time is that in the end, we made a mistake because these four things are not equally important. We think ultimately the customer and value proposition is what really drives change. And it's really at the heart. It's really the thing that makes it work. And it's the raison d'etre of the bank. So that one is actually what should drive the change. Still, you cannot improve your customer and value proposition and digitize it and have customer journeys and design thinking if it is not being supported by leadership. So still aligning through digital strategies is important. A very firm leadership commitment. We also see the need to have access to resources for CapEx investments, but primarily also liberate time of your staff to be able to work on these kind of solutions and implement them. And a very important one is also a fundamental change in how you manage your operations, and particularly the need to create these cross-functional teams that can really where you bring your IT capacities together with your business capacities to really drive these customer value propositions. So that's been our journey.
Great, thank you so much. And I will look forward to hearing experiences also from the MFIs and other practitioners in the room on what your experience has been. So now we'll switch a little bit to another angle on this, that is talking about success. What does success mean for you? So, because that's really, again, we're sometimes, make assumption, it means the same for all of us, maybe it doesn't. So we would like to, I'd love to hear your perspective on this. We'll start with you again, Khalid. What does successful digitization mean to you? And does it look different across the Vitis group, or do you have a standard way of tracking the value, tracking success? Let's just tracking success.
Yeah, I think it's very standardized across the group. We can break it down into three parts, how we measure success. And I think the first and the foremost, and I did not answer the question on the challenge, which is linked also, is the human resistance. And what we found out was that it is not the frontline staff or the field staff which is resistant. They are actually much more savvy than some of us. It is the middle management which plays a role of resisting it, because they get scared. They forget that we were at a stage where we had to go to someone much older than us 20, 25 years ago and help them understand how Lotus 1, 2, 3 works. And the person would not believe it. And I think we are all at that stage where we are scared to learn something new. So the first thing which for us success is the ownership. And the way we do it is through projects, of course. And one thing which I would like to say is that for a lot of us, it has been a U-shaped learning curve. We have to unlearn a lot of existing or legacy thought process in terms of what the product will look like and how will it work, and relearn the new way of doing this. Number one. The second is our thesis is that there is a segment of clients out there which we cannot reach out as efficiently as possible through the brick and mortar model. Only we can do it through digital model. So I'll give you one example. Let's take a local example of Uber Eats, if that is there, or some deliveries as service platform. They have merchants on their platform. In the markets where we work, it is all cash based. So the guy, we place an order, the guy goes and picks up the burger, he brings the burger to me, I pay him cash, and that's it. At that moment, the cash sits with the platform. The merchant will get cash after a week, 2 weeks. So we thought that if we offer the merchant cash right now, that will ease up his cash flow. And it worked. So the second measure of success is the product design. The product design is completely different. The existing product will never fit, not from the process standpoint, but from the design standpoint. Number one, for example, what we have tested, and we succeeded to test it in Lebanon was that one client, which we used to give loan of 12 months, a working capital loan, when we transferred her to the digital platform, she took 11 loans in 9 months, 15 days, 3 weeks, because you can link the loan with the commerce transaction, and that you cannot do in the manual. So second thing was, we tested the product, that the product has to be totally different. It is not the same product. I think the third is the financial piece. We haven't touched that. We haven't gone there. But in Palestine, 13% of our portfolio of over $70 million comes from digital channel. So we originate all remotely. It's through alternate channels, and we have calculated the operating cost, and it is cut down by around 3.5%. So we had an operating cost of around 11%. Now it has come down to, for that portfolio, 7%. So this is how we look at success. The next phase which we are working towards is scale. And that we have to test. So we haven't gotten there.
Great, thank you. And maybe just a follow-up question. So you mentioned kind of how to, you mentioned some of the elements of success, but I'd like to just probe a little bit more on how do you track it? So do you have, ultimately the product design is important because it drives adoption, because it drives usage. What are some of the metrics that you track on a regular basis across the group? Could you share with us?
So if you think of a MFI performance matrix, you can think of the old-fashioned indicators, productivity, turnaround time, operating cost, blah, blah. Now, we kept the same matrix, but we added channels in verticals. So we can compare the by each channel, what is the cost, how much is the revenue. And it's very interesting because shorter is the loan, higher is the yield, and lower is the cost. So we can see by channel. So we didn't have to do anything fancy. We just came up with the 3 verticals, that these are the 3 channels. This is business as usual. This is alternate channel number 1. This is alternate channel number 2. And that's it.
Okay, great. Thanks so much. So now let me turn to you, Peter. So Peter, again, works with EMFB Nigeria. EMFB Nigeria was one of the MFIs that participated in the CGAP pilot, and actually both the automation of loan renewal and the business intelligence. And in those pilots, so we had a chance to look at various customer behavior patterns that are linked to digital channels and products and really tear that apart. And some of the questions that the MFIs reflected on after seeing the changes of behavior in their own customers, after seeing their own dashboards, included some of the questions about adoption and usage of the digital channels or the new digital product. So just to give you an example of some of these questions that we asked and that triggered some of the conversations that we had as part of this project with the MFIs were, what is driving customers to sign up to these digital channels? Once you see the trend in adoption, just what are the assumptions, what are the hypotheses that institutions are making on what is driving customer adoption? Why are some customers signing up and others not? Why are we seeing some spikes of adoption? Why, when we dig even further into the data and we look at the number of transactions, when we segment the customer base, we see that a very small portion of customers are really driving all of the adoption, because 10% of customers are making 12 transactions a month, and then the rest of the customer base is really not transacting at all. So those were some of the questions. And then beyond adopting digital channels, the participants were also reflecting on that usage. So that really spurred some line of inquiry for the future of what the data was not telling, but just what institutions were interested in digging into a little bit more. So Peter, going back to you, as a participant in those pilots, you've had a chance also to track changes in the behavior of your digital versus your traditional customers. So can you share how this effort helped you to better understand where digitization is creating value?
Thank you, Isabel. Just before I speak directly to your question, I would like to also say, for us, before we started the whole journey, we defined that same question. What does success mean? How do we know when we get there? What are the things we're looking out for? So for us, luckily, we have a 3-year strategic goal that aligns with the vision, the digitization pilot of CGAP. We wanted to grow our customer base, wanted to acquire customer at scale, wanted to optimize our processes, our operational efficiency and all that, then customer experience. Because at the end of the day, it's all about the customer. It's not really about what technology you're happy to do, is what your customer wants. So talking about the adoption, speaking to Isabel's question, we started operation in 2007, and a number of our customers are people at the bottom of the pyramid. And when we started taking them through that journey, by the time we did the analysis, we've acquired a lot of data over the about 15, 17 years before we embarked on the CGAP digitization pilot project. Then we started seeing the behavior. Many of these customers, at first, the resistance I talked about, then a number of them started trusting the channels gradually. So for us, what we did was to extend the alternative channels. In various demographics, success means different things, different technology the customers will prefer to use. So for us in our own, it was the USSD channel at first. Then we started watching which channel are they transacting with most. Then we started hand-holding them. So when we give them credit, we make them use digital means to access the credit. If you leave the customers to themselves, they probably won't follow you through the journey. Again, you have to handhold them. Luckily for us, we had up to 500 field officers, relationship managers to engage these customers, so customer engagement. The drivers for the adoption, for those that follow the journey, the ease of the channel, simplicity. So you give them the channels they prefer, they are comfortable using. I will just mention this. One of the things we did, one strategy we used, which worked. So we realized that data was a challenge for our customers. So for the product we're pushing out, we had made partnership with telcos to subsidize that link. So when you create a link, the customer is not paying for access to the data. The bank incurs that cost, right? Then ease of access. So speaking about the data again, we started observing that over the years, the trust was growing. The customers that were initially resisting the channel then started using our repayment means. Instead of asking them, come to the branch to make your repayment, why not visit the closest agent to you? So the ease, the adoption started growing. But then again, there are still some native hardcore traditional customers that will not follow that journey. But you must continue to provide financial services for them. So that's how we've managed to evolve.
Great, thanks so much. Marnix, can you share from your perspective, what are some of those, what are some of the key drivers of success from your perspective?
Yes, in 2020, actually, we did a study, a survey of our investees to understand what the level of digitization was, the digital maturity, and thank you. What the level of digital maturity was, and in order to actually classify that, we created a system to somehow to be able to classify the state of of digital progression along a yardstick. And we looked at elements like the number of digital solutions being implemented, the percentage of transaction being digitally processed, but also internal commitment and capacities were brought along. From that survey, we discovered that everybody wants to digitize, but actually still 40% was really starting or novice, really novice. So just testing the first like new kind of digital solution on top of the core banking system. So that was quite surprising because we had anticipated that things would have been moving faster. Reasons why things were moving slowly, particularly for the ones that are starting it. Number one is actually lack of resources. And it might also be intertwined with sometimes a lack of commitment or actually a deep sense of urgency for the need to incorporate digital solutions and build a more digital oriented organization. In that same survey, we also asked our MFIs to define success themselves. And number one of the success drivers or successful outcomes was client satisfaction. So it really, it's the customer value creation pops up again. So 81% said, well, really, that is what we use as a yardstick. In that list of outcomes at number 3 and 4 was market share and client retention. So if you sum it up, I think this is really about indeed driving a better product for your customers and improve your market share. But the second thing that popped up, which was interesting, is also staff satisfaction. And it relates maybe a bit to the point that Khalid mentioned, is that overcoming resistance is critical. And as soon as you create solutions that are not only beneficial for your clients, but also for your staff, everybody's happy and everybody wins. Third, I think the benefits for the shareholders, increased efficiency and profitability popped up. The reason why it popped up only so late, I think, could also be related to who filled in the survey. But I think these 3 factors actually are very much closely intertwined. For us, in our programs to continue supporting digital transformation, we deploy subsidies to do so. For us, the main reason to deploy the subsidies is not related anymore to de-risking in the microfinance sector. We sense that the microfinance sector is mature enough and can do it him or herself. But for us, it's really about enhancing impact. So for us, success, the way we define success is really reaching out to underserved market segments and providing appropriate and better and cheaper services.
Great, thanks so much for this. And actually, you've touched on a point. Well, first of all, you've given some examples of success that touch both, that speak both to the business value and to the customer value. And on the customer value, just wanted to mention that in this project, we looked at customer behavior, changes in customer behavior as a proxy for customer value. So fully acknowledging that customer value is not just measured by customer behavior, but I think some of the metrics, some of the elements that you've mentioned complements that full picture of how to measure customer value. Having evolution of customer behavior on one hand, important to track because ultimately that's what people are doing, seeing how they're transacting and how the implementation of digital channels are changing their preferences, but then also having just those direct conversations and feedback from clients. So you've started to talk also about the drivers, and so I wanted to ask our other panelists, about drivers. I know it's hard to touch on these topics in a way that is really segmented. We tend to all of this is threaded. So we've already talked about a few of these, but if you could summarize what are the key drivers for successful successful digitization for you, what would they be? So Khalid, I will hand it over to you. And how do those principles resonate also? Is there anything that resonates more than other?
I think I mean it's a big question, and we have to deconstruct. I think first of all, when articulating the strategy, the clarity is the most important piece. For example, questions come up. Our client. I mean, you see resistance and lack of clarity, in so many shapes and forms. For example, they say, "Oh, this doesn't happen in Jordan," or Palestine. "Oh, we are not ready," and don't know about Iraq. So I think clarity brings the drive. It helps. So I think the strategy has to be absolutely clear in terms of what is our strategy. Are we going to change our existing client and bring him to digital or bring her to digital or not? What is the strategy? What is the strategy on the project? So this is number one. Number two is with the legacy organization like ours, we realized very early on that we do not have to change. The innovation cannot happen in the existing business as usual because the product is different, the client is different, process, the technology it will not happen. It will just get derailed, and it will get being resisted at every stage. So what we did was we insulated the innovation and testing of new product completely from the current operating structure. It eases out the pressure because then they can concentrate on business as usual. And we insulated and we empowered a smaller group. So we make these mini labs. So insulation from the business as usual was another one. Once we did that, then we came to the development side or the tech side, because I think tech is a consequence of business strategy. And most of the time we were trying to fix the tech, whether it was a business question. And we adopted the agile methodology. And we brought in a scrum master, all the fancy terms. And then we realized, one of our scrum masters said, we can be agile, we can give you a composable product. The business has to be agile as well. And that was actually more important. And then we had to strengthen that insulation, and it confirmed our thesis that it has to be insulated. The last thing is that in our experience, the main driver is understanding the customer need. And when we say customer segments are multiple. The way we segment the customer are from an age bracket standpoint, because most of the people who have a first response to go digital are usually younger. They don't want to talk to anyone. They want everything in the app. They want it hyper customized. They want it quick. So we segregate it. So I think understanding the customer behavior is the main driver. The moment you understand the customer behavior, then you are able to do the product. And we tested the product, and the product works. I think the digital product in the B2B space, the BNPL space, it works, and we have seen that. And I think these are the three drivers which I would rate highly.
Okay, great. Thank you. Peter, what about you?
Yeah, thank you. Quite similar to what Khalid have said. It is important to have the agile team. So for us, the very first thing I recall, because I managed the project for the CGAP digitization project, I recall first when identifying the project team, first, understanding everybody having the same vision. The agile methodology was what we adopted. Then, of course, like I talked about during the challenges, having succession plan, a lot of surprises will happen. A number of the initial project team, when they migrated, the succession plan was clearly defined. So first, you don't wait till it is perfect before going to market. It's important to adopt the iteration method. Customer research, you have to understand your customers, what they want, then be quick to incorporate again the product release. You don't have to wait till the entire features are ready. Keep it simple. And you may not necessarily have to invest heavily first to get it done. Start from gradual release to the market, the speed of execution, be fast to get to the market. It's okay to fail. It's okay to try and fail, but how fast do you bounce back? Continue communication. That is, for me, most critical. Customer education, continuous communication. It builds the trust. So the stability of your channel, because what's the effort you will use to regain confidence of the customer, especially when your channels are not stable, it's almost the same, more than the effort you use in building at first. So stakeholders engagement in terms of the customers, then don't wait till it's perfect. Have the team. The entire team must have the same vision. And again, of course, you need massive support of your technology team. Because at the end of the day, you may have all the strategies well documented, the vision and the like, but of course you need technology capable hands to drive it. So if you do not have sufficient to build in-house, then you can partner like we did. We partnered with a fintech, Rubik's, to achieve our objectives. So, but more importantly, reassessing your strategy over time, reassessing it to be sure that you're not deviating. So the three things I'll leave out with. First, the team. Of course, they have to be trained to understand agile methodology of building. Then secondly, customer education, communication, constant communication, customer research, and the like. Thank you, Isabel.
Thank you so much, Peter. So one last question to close this this discussion, and then we'll open it up to the floor. Another challenge is so not just creating success in the first place, but then replicating it, right? How do we scale? And I'd love to hear from all of you, what are your thoughts on this? I know that you've mentioned some struggles around scaling, so we're not especially looking for the solution, but what are some of your hypotheses that you're testing, or what are some of your views on what it would take to bring successful solutions to scale? So I'd like to hear from all of you, and we'll start with Marnix.
Yes, one of the things that we tested 2 years ago, no, last year, 2022, time flies, is an academy that is based actually on P2P learning. So less based on more traditional curricula. It's really where practitioners learn from each other. So that is the way that we now want to move forward, also in continue to support our clients in digital transformation, preferably digital transformation to promote further inclusion and impact. We will be launching a digital transformation program that works across that academy. That it's a digital platform, but it is in the end the value is created through the interaction of practitioners. While the practitioners are at the core of the program, we also want to work on different streams First, we want to promote business cases where we show that indeed customer value and business value go hand in hand, to continue promoting the subject. We also want to put responsible digital lending on the pedestal and see how we can team up with the SPTF team and actually continue to promote that and make it really a sector-wide standard. And fourthly, there's an element that we want to further seek into. We sometimes sense that while there is a lot of customer value in the current loans, the loans at the level of the recipient are not necessarily transformational, in the sense that money alone doesn't make your enterprise flourish. And we've now seen a couple of very interesting examples where also using digital approaches, offering financial education, but also business development services, in addition to your financial process, could actually significantly enhance the impact of your services. So that's what we're going to roll out in the years ahead.
Great, thanks so much. Khalid, what are your thoughts on scale?
Well, I mean, the short answer is I don't know, because we haven't scaled up as yet. I mean, what we believe is that the digital adoption is a function of time. It's not it will be market driven, and different regions are at a different level of digital financial services. For example, if you look at Asia, I think they are at the forefront clearly. Grab is a fantastic example as to how within the super app you can have a financial angle and vertical with it. So I think first of all, it's a function of time. The way we are positioning ourselves is that when the wave comes, because we see now in South Asia, for example, in sub-Saharan Africa, most likely, but at least in South Asia, I've seen there are digital native MFIs coming up. And once they come in for all the good or not so good reasons, all they want is to scale. And they think about the solution solely from a digital angle. So the digital native, so the question for us has been, how do we handle that kind of competition? The competition is coming from a very different faction. MFIs and the banks are not going to be competition. The competition will be super apps, Kareem, Uber, Grab, like they will be the competition. Competition will come from the e-commerce platforms. Once all the financial service providers get embedded in there, this is where the competition. So our view is that we as a B2B lender with a financial inclusion and job creation angle, we have to be ready for that wave. And for us, when the wave comes, if we are ready, we can ride the wave. If we are not ready, I think we will get pushed out. This is one. Two is, I think the most of the scale which you see, with few exceptions, in the at least till 2 years ago, was coming from non B2B lenders, digital lenders. So you see Kenya, you see India, many examples. But now we see the digital native B2B lenders coming in. It's very clear that it's a matter of time they will come. So I think we have to be ready. I mean, this is how we look at that. When we want to stay relevant, and when the wave comes, we can ride the wave and we scale it up. I mean, the last thought is, I mean, it does come to at least the mind of our core team. We are 9 people who run 5 countries. That what if we should just go and set up a digital native NBFC? Maybe this is as a lending as a service platform. Should we do that? So these doubts do come to our mind, but till now we are sticking with the problem.
Great, thank you. And Peter, last thoughts.
Okay, thank you. I will start by again, if it's fine, I would like to share again from our experience on the auto renewal process, credit process. So To scale, what we're currently looking at, because we've seen success. We piloted with the product that has the largest number of the portfolio size, and we saw the type of success we're looking for. So to scale, we have now established digital first. It's important to mention that first, you don't digitize the same old process. So first, the process, we're now doing all our various products, reviewing those products, and we're now scaling. At the moment, we've added more products. Initially, during the pilot, we started with just one product. By the way, we have about 10 different products for different markets and category. So scaling, we're adding more products, digital first. Of course, we started our digital lending. We're not trying end-to-end process for the same traditional product. So we're not necessarily creating a new product as it were, but the same product, improving the process so it gets to end-to-end. And yes, we've started scaling. I think earlier, middle of this year, we've already added all our products, increased the loan size. By the way, I don't know if I mentioned this, but it's important to also include that one of the metrics which we used in measuring success in my own sector, the quality of the loans we were given, the speed. So for us, we were very, very satisfied with the quality of the loan, despite reducing lots of those bureaucracies, lots of the checks in the process. So now we've seen that type of thing we want to see, and we've gained that type of trust, and we're replicating it across various products. So it's important first, before scaling, you reevaluate again if those initial metrics were met. And for us, scaling again will mean reviewing the KPIs. I mean, the KPIs of the portfolio managers and the like, because when we started the project, we had 80%, above 80% of our entire portfolio were repeat loans. So now we've reviewed the KPIs, and the portfolio managers are now focusing on growing new loans. For the repeat loan process, is now completely self-service from the customers. There's the channels, leveraging on the data already, historical data already have for about the customers, and they get the loan. So portfolio managers are now focusing on growing the base. So we are scaling up. Thank you.
Great, thank you so much, Peter. So we will close soon this part so we can open it up for question. We've seen in this panel through the contributions of our panelists a range of examples of what success looks like, how success is defined, what are key drivers of success from different perspectives, and also some views on scaling. You feel that the successes in particular highlights the potential to go deeper in our analysis, to be able to track the value that is being generated with digitization at all levels. We look forward to hearing the progress of the continued digitization of loan renewal, Peter. So please continue to share with us. So I just wanted, in closing of this, mention that all of the resources that CGAP has developed as part of the MFI Digitization project are housed on the microfinance page on CGAP's website. So it's cgap.org/microfinance. And we have 2 new publications that are released just yesterday that summarize our learnings from the pilots and from the community of practice. So the one on building the value through automation of loan renewals, and also the role for funders. So some recommendations for actions from funders and holding companies and networks. So I encourage you to check these resources when you have a chance and give us feedback. So now let's move to questions. Please just raise your hand. The floor is yours. And we have a question.
Good morning, everybody. My name is Matteo. I'm a freelance consultant and been collaborating with Amas Norway over the last 2 years. Quick question to the panelists. I would love to hear your views on the journey where on the right-hand side, we have extreme technology. On the left-hand side of a straight line, we have extreme touch, so human beings involved. What is the point of equilibrium for you guys, for your institutions, for your firms? And assuming, second question, we go towards the right, extreme tech, what problems do you think will surface that today we are not discussing? Thank you.
So who wants to start?
I can start. I mean, we have a lot of MFIs in our portfolio, but also fintech or digital native enterprises. And what we've seen is there is a point of convergence. I don't know exactly where, but maybe if that's your question, I'm not in the position to answer. But I see particularly the ones that are digital native, and to a certain extent, we're also are digital naive in the sense that doing everything digital doesn't work, particularly if you need to manage your loan portfolio, you have loans in arrear. You see, particularly for that loan recuperation part, there is to be a touch point. So ultimately, we see the ones that were hoping to have 100% digital operations have started to build up their offices and field structures. Anyway, so that is partially maybe answering your question.
Go ahead.
I think it's partially also driven by the physical, digital, and regulatory infrastructure in each market. For example,
Sorry, don't you think it's also driven by the customer needs?
yes, so I'll come to that. But I think primarily, if you, I mean, as my colleague mentioned, that even the digital native have started to open offices and all that, that is generally driven by the customer. But first, if you look at the regulatory framework, for example, if there are no digital signatures, you have to have a touch point. If there is no digital invoicing law in place, whatever platform you build, you will have to have touch point. So there is no clear answer. The way we did it was we draw up the customer journey for each segment, and we identify the touch points, and we see what can we eliminate practically. And we haven't gotten to end-to-end. One. Second is, I mean, our research might be dated because one day is a long day in the digital space. But if you really go to B2B model, where you actually finance businesses, there were 3 or 4 service providers who claim to give instant loans in the emerging markets or developing markets, not in the West. So that says something about the customer, the availability of data, and the digital and the regulatory infrastructure.
Okay. Again, let me try to share a bit of perspective from my own region and from what we're seeing. Now, this is my personal view. The tech and touch and self-service and the like, for the MFI may continue to run. You will almost always need an assisted channels. You almost always need the relationship managers to drive this. I mean, if you want to really practice the microfinance as it were, because from my region, the number of people we're targeting, again, it depends on the vision of the organization. We're interested in those at the bottom of the pyramid. We're interested in the low income earners, and that is one who abides to that practice. And a number of these people, the relationship, that physical touch, in terms of the process, yes, you can completely achieve automation in the process. But talking about complete end-to-end self-service. A little of them may be the ones in the SME categories that are taking large loans, but they almost are going to both run concurrently. So what we're doing in Nigeria, in ASEAN MFB, we're creating both alternative, and we'll continue studying the data. We'll continue studying the adoption. So we have a product we call school fees loan. School fees in my country is a big deal, and the parents, we are now providing access to credit for these entrepreneurs if they want to access school fees for their children. Initially, when we created that product, it was end-to-end traditional, and the adoption was a little bit low because of the bureaucracies in the process. So what we tried to do was to digitize that particular product, and we trusted the system. Yes, there will be challenge from regulators, like you rightly mentioned, where you have to take digital signatures if it's compulsory in a particular country and the like. But we tried it, we digitized that product, and I can tell you, because from what we've seen, it worked. End to end, it worked. So taking it one by one, product by product, you see the behavior of the customers, but again, it's a journey. I'm not seeing it, I don't think there will ever probably be a time where MFIs will completely achieve self-service completely. There will always be that need for the portfolio managers. This is my view.
Yeah, nor would they want, right? So we were talking about the differentiating factor with the fully digital lenders. That's also an important point. We have time for maybe a couple more questions. One other question here.
Thank you. Tatiana, Triodos Investment Management. A question to all three of you. Did you measure it, and do you have any evidence that digitization brought in some other previously excluded? So did we include more or did we just change how we service them?
Thank you for the question. Khalid, it looks like you want to answer
absolutely.
first.
I mean, this is our whole thesis, that there is a segment out there which is excluded because the current brick and mortar model cannot reach them. So if someone is supplying food on a delivery as a service platform and does not have a formal, visible place of business, we cannot reach them. So absolutely, I mean, there's very clear evidence that these businesses exist. Sometimes they have two channels, physical and digital, but there are some who are completely digital, home-based businesses. So at least we have seen that. And eventually, I mean, the pie of these businesses which are dark, it will increase, and it is increasing as we see.
Thank you. Any last question or comment from anyone? Okay, great. Well, we're at time, so I want to thank our panelists again for your wonderful interventions, and thank you for everyone in the audience also.